Welcome to How to Money with Kole and Cole.
I'm Kole.
And I'm Kole.
We coach people every day on their money and how to plan for the future.
As financial advisors, we're here to have an honest conversation and educate you on investing, retirement, and everything in between. And we'll throw in some sports talk along the way.
Our mission and goal of this podcast is to improve your money journey and help you create the financial life you deserve.
So let's talk money.
And sports.
Welcome back to How to Money with Cole and Cole. I am Bailey Ashbrook, investment advisor representative, and I want to hear what the guys did for their wives on Valentine's Day. Happy Valentine's Day. Put you on the spot.
Yeah, happy Valentine's Day. Cole Peterson, investment advisor representative at Central Financial Group, and we decided not to do anything, but I was up when my wife was awake to go to work today, and we had a hug and a kiss and said happy Valentine's Day.
Very romantic.
Oh, very nice. Cole Jaskey, financial advisor. Yeah, I got delivered Starbucks, not Dunkin', excuse me. Starbucks. That's like a key to my wife's heart is Starbucks in the morning.
There you go.
I love it.
I thought she was a Dunkin' girl.
They got the new Starbucks open in town, the drive-through. So that's catching.
She's cheating on Dunkin'.
Yeah, it's catching, and it's more expensive. I've noticed. It's
Starbucks is.
Oh yeah,
it
is definitely more expensive.
I don't drink coffee.
Inflation.
Yeah.
Caleb Westall, producer of How to Money with Cole and Cole, digital media designer at Spin Market. Me and my wife haven't done anything yet. We're gonna go out tonight. So
No kids' life yet. You're so close.
I know. Lucky.
Yeah. You guys are still in that honeymoon stage where you still celebrate Valentine's
I told
Day.
you guys used to be so romantic on these days.
We're not doing anything huge because we're trying to like save every penny we can because we're about to buy a house. So
Right.
can do
we're
a
gonna do
cheap
something
date.
small tonight. Yeah, we're gonna do a cheap date tonight.
That's
so
fun.
yeah.
All right, what'd you guys think of the Super Bowl? Would you
man.
make the call or not as that ref? Change the game.
It
The end of the game.
it stinks that it came down to that. But and Cole said this yesterday in the office. It was a hold at that time in the game. Do you call it? That's the hard part.
It's so hard. And now I did like to see, I saw a lot of the Eagles players were like, all the media was asking about, and they're all like, well, we shouldn't have been in that position.
Yep,
right. And that's the correct answer there of like, shouldn't have came down, as a team, like you don't want it to come down to one play. But yeah, it's kind of a bummer. It was an awesome game. And then you kind of have that happened and you knew the game was over. Basically,
Yep.
it was a first down. And
I was trying to explain to my kids why the game was over.
Yep.
Or to my son, I guess my 13-year-old's the only one that was awake. But I was trying to explain. I was like, well, they can run the clock out now because the Eagles are out of timeout, so they can run it out. And but that game, it seemed like the Eagles were going to win.
Yeah, Jalen Hurts was. Ugh.
I mean, the whole game, I'm like, it felt like the Eagles were up like 20 points the whole time.
I told my dad, I said
nonstop.
if they hadn't had that scoop and score, it could have easily been 28-7 at halftime, and it would have been over.
halftime adjustments. So you can
And
see
that
the
huge
Chiefs
punt
came out.
return.
Yeah,
That was huge.
Yeah.
But
There was on the punt return. There's never been a punt return
Yes.
in the Super Bowl, and then the special teams coach had said something to Greg Olson or one of the announcers. Hey, there's going to be he was calling basically calling a punt return, and it just close.
Oh, so close.
It never happened. That's never happened in the Super Bowl.
And my son was baffled by that too. He goes, in 56 years, there's never been. He just couldn't believe it.
Yeah.
I was like, apparently.
that had to be one of the best Super Bowls I've ever seen.
I thought it was a great game.
It was a really good game.
Good
So-
Fun when
Awesome
there's a lot of action scoring. It's not
Yeah,
everyone
but hey, Bailey, I forget who picked the Chiefs and who picked the Eagles.
Thank you.
Do you remember what happened?
Colby and I won, and I love winning.
Yeah, we get free lunch. We already got it on the calendar.
Yep, it's on the calendar.
Thanks, Lizzie.
Me and Cole J have to pay up.
Yep.
Yeah.
That's
Cole
all
J
right.
will pay up. You're saving for a house, I'm
Yeah,
sure.
well,
He's gonna fit the
I'll
bill.
cut you a break.
He's
there.
a kind
Yeah.
guy.
No.
Yeah.
All right. Well, I'm excited for that lunch. Thank you, losers. But if you did not catch part one, you need to go back and listen to the episode before this. We kind of talked about part one of what is it like to sit with a retirement planner. And we went through statements, retirement income, investment assets, all that good stuff. Now we're kind of going to shift and go through liabilities, debt, budgeting, my favorite word, budgeting, and all that good stuff. Caleb, listen, because this is great for your getting ready to buy a house, young guy, getting a young family. So, guys, I'm in my first meeting. I'm younger, I'm saving. I might even be younger, but I might be. Why do you need my mortgage statement? Why do you need my vehicle loans, my business loans, my credit cards? What do you guys look at with that stuff?
Yep. So, this really comes into kind of the budgeting aspect of when we're sitting down having meetings with clients. And really, we're going to talk two different types of budgets, right? You got the pre-retirement budget. Maybe that's, a young person like Caleb's family or young family. We're talking a lot more in the debts, liabilities. Where is your money actually going month to month? Where's that paycheck going? And then on the other side of that, that's the post-retirement budget. And that's where maybe we handle a lot more just with our clientele base, but we do a lot of both. And that's, what are you going to be spending in retirement? Is that travel? Is that, healthcare needs, medicines? What does that look like? So 2 different types where a lot of times in retirement, you got a lot, your mortgage is gone. Not always, but most of the time your mortgage is gone. You don't have that car payment. But, I'll let Cole talk a little bit more on the post-retirement, but the pre-retirement. So Caleb comes in and he gives me all of his debt statements. We're going to go through and look at some different strategies to say, hey, maybe there's something that's a, higher interest rate or something we can look at refinancing or pay a little bit more on and pay a little bit less of something else. And look at where where is the money actually going? And that's where we start there and kind of do an analysis or a deep dive on where's the money actually going.
Yeah, and I've also seen people in that age range where I'm like, why are you double paying your mortgage that's 3% and you're single paying your car payment, which is 8%? Like, we're gonna, and not that people like Caleb are
he's a great example.
We're gonna keep
pointing, and Caleb hasn't come in and told us all this stuff. We're just using him as an example, but at the same time, some things that may seem obvious to us because we look at this stuff all the time are not always obvious to everyone else. So we're gonna ask you those questions, and some of that stuff, maybe you won't know the first meeting or something, but we're gonna ask you, try to get what your interest rate is on your car loan, especially if you have a big one, or get your interest rate on your business loan, get your interest rate on your, so we want to see those things because we're really interested in where your money's going, what debt you're paying off, and can we save more if we pay off less debt? How do we want to go about that?
Yeah, I think we become like an intermediary or a discipline. Sometimes, it's harder for people. It's easy to get a credit card. It's easy,
I got several of them.
Yeah, for most people, it's easy, right? So that's where, having those conversations, I think it's a lot of times people know, but, pointing it out, getting it on paper, kind of black and white of like, oh, I am, spending this and I'm paying. A lot of people don't know what they're paying in interest.
I was just going to say that a lot of younger people,
no idea.
Even if you say, what do I make? Like they're like, oh, something around, you know what I mean? And just to know exactly what's coming in, what's going out. I think a lot of people don't want to look at their debt and put it in front of them because then they're more like, oh, that's a lot, or overwhelmed, or just don't even know where to strategize. Or it's actually almost freeing to look at it like, here's my mortgage, here's my student debt, here's my car loan, credit card, whatever.
Have a plan.
What's priority? Where can I put a little extra, or where can I? And that's kind of what. And I've used this analogy with Cold Pete. Like I work out, right? I don't just make my own workout plans. I don't just do it on my own. I follow a plan. I have like fitness planners. I have Peloton, and they do my workouts. And it's like that same guidance. Like I think you're overwhelmed because you don't.
If you go to the gym without any idea of what you're going to do, you're probably. I mean, you can get some stuff done, but you're not going to be that productive. Or if you go and you have 8 things you're going to do and accomplish in this time period, you're going to get a lot more done.
Same with your budget.
I'll give a real life example of this because I had a client. She was in her 30s, and she came in and she wanted to invest some money. She had saved up some money. She had about $50,000 sitting in savings. I was like, oh, great job. That's awesome. Especially at your age. She's like, I wonder what to do this. And sometimes people wonder why we ask all these questions. So I started asking her questions, and she told me eventually we got to the debt, and she said she had $10,000 worth of credit card debt.
You're like, why? You have 50,000.
I'm like, okay, what's the interest rate on that? She's like, oh, I don't know. Well, we brought it up, and it was like 12.99% that she was paying interest on this, and she had been carrying a balance for over a year. And I'm like, you have $50,000 in savings, and at that time it was only earning like 1%. And I'm like, that's earning 1%, and you're paying 12.9. Like, and don't think that like we talk down to people. We just kind of make them realize or open their eyes to like, oh, I should use 10,000 out of my savings and pay off that credit card debt, and then maybe invest 20 instead of investing 30.
I get a question, but maybe for both of you too. This is a good one that comes up is when we are talking about the buckets of accounts. The savings, checking. Talk a little bit about like emergency savings. Yeah, that's something. I guess what's your guys' thoughts or philosophy on that? On how you look at it.
Young people without kids, I think matters. Like we have 3 kids. Okay. Obviously, my
this is that
emergency
pre
fund
and post retirement
is very important.
Too.
Probably more than Caleb right now, who could maybe get by with 3 months expenses. But I think a great rule of thumb is 3 to 6 months of your fixed expenses, like your mortgage, your lights, your water. You need the food, the basics.
How do you know what your fixed expenses are?
oh, I budget them.
Yeah, exactly.
Yeah.
So that's where it all
Yeah.
kind of works together.
Yes.
That's
and
the important piece.
Maybe
to
break
it.
that down for a budget. Fixed. non-fixed.
An easier way to go about it, instead of if they don't want to do a budget, or if you haven't done a budget, it is just 3 to 6 months of what your earnings are.
Yep.
Too.
Yep.
So you can, if you make $35,000 a year, you cut that in half, 17,500. In somewhere between 0 and 17,500 is what you should have saved up. Just in case you were to lose your job, or someone got hurt, something like that. That way you have something to fall back on, where if you're not collecting a paycheck.
Yep. Everyone, get your emergency fund in line.
Yep.
All right, Cole J, break that down though real quick on the budget. Like, I'm sitting down. What are my fixed, non-fixed? What do I look at?
Yep. So your fixed stuff would be, obviously, first you got to start with your income, right? What are you making? What's coming in, right? That's income. Maybe you got investment income, you got a business, whatever it might be. Then you go into your fixed liabilities or fixed debts. So that'd be your car payment, your house payment, any medical bills, student loans. That's a hot topic right now. And then your non-fixed or things would be credit card debt, maybe
Eating out?
Eating out, yes.
Everyone
eating out.
Starbucks?
Yes,
Starbucks for Chelsea.
Your Starbucks budget,
Gifts.
Gifts,
birthdays,
Christmas,
stuff like that.
Christmas, right?
That's variable expenses.
Those are things that
change.
we're going to go throughout the year of getting an understanding are, and then obviously you got to shift into, okay, now I want to save for retirement. What's my fixed retirement savings? Am I doing contribution to my Roth IRA? Am I doing a non-qualified account? Am I saving, for my kids' education? Those are all things that, and that's where I always treat those when I talk to clients about, what should I save for my kids, right? Or that extra savings, where it might be, is I try to always get them to look at it as a bill. Hey, that's a fixed expense. That's the cost of making it work. You can't let that be the should we go out to eat all week or not save for that 529 account? And it's like,
pay yourself
you got to treat that as a bill and treat your savings as a fixed expense.
I agree.
Absolutely.
That's a great tip.
Or investment in yourself is really what it is.
All right, let's shift. So you guys, we got my budget. It's a great budget. I looked at all my debt. I'm not scared. You guys have put me on a good plan. You're guiding me on where I want to be, putting down debt, saving. Okay, what other assets do you want to look at in the meeting?
So we also want to see what you have for insurance purposes. So life insurance, long-term care insurance, more for the later group, but also disability insurance, auto and home. We're gonna look at, okay, what if something happens to you or to your family? What do we have to cover it? So we're gonna look at those things. There's some life insurance that holds cash value, so we're gonna put that in your plan. So we want to see what the it's called the risk management. So fancy word with basically insurance.
Okay, perfect. And why are we looking at my life insurance at a younger age? Why is it? I'm going to go the other way in a second, but I have 3 kids, me and Luke.
Tying we were just talking about budgeting and debts and, debts, fixed debts, whatever it might be. So first and foremost, I'll use an example where, maybe one spouse is income, the reliance is on one spouse's income, right? And if we have $500,000 in debt between house payment, $350,000, 2 cars, and some student loans, and one spouse's income, pays most of the bills, we better make sure that if something happens, that other spouse, has something to take care of them or get them through that tough period. And that's where, and then budgeting for that expense, because it isn't, you got to pay for the life insurance. So figuring out, okay, how much can we afford, looking at the debt, looking at the income, and we're looking, definitely more on that younger family side right now. Obviously the shift, when someone gets into retirement stage, that those goals and objectives change, but that's what is important. And it's really tied back to your budgeting.
Mm-hmm.
Yeah. And I want to plug this in for young people, because I know that's like a kind of a focus point of today, but life insurance is something like you just keep putting off. And I was just laughing with one of my friends, like, oh, I'll do it, I'll apply. But it is so important, because it is tragic if something, and it's pretty affordable at this age. Like, you can get a pretty decent coverage for a very affordable amount in your budget.
We're a little younger than Cole P over here, but I've got a lot of friends that I talked about life insurance 5-6 years ago, and they're like, not a big deal. Now all of a sudden they're married, family, kids, debt, and
yep.
I'm having
and it gets more expensive as you get older.
I've been having a lot of
life
life
locked it in 5 to 6 years ago, you would have got a price that was different. And also people, you get more medical issues as you get older.
Yeah.
Most people don't realize that.
And then your rating gets worse.
Yeah, if you can lock in a payment at age 30 that you have for the next 30 years, That's huge.
This is a real life example. I have $1 million of term life insurance for 30 years. I pay $700 a year. I mean, if we're comparing if something happened to me and Luke.
Yeah, who sold you that? I forget.
Yeah. And same with Luke, you know what I mean? And I don't want to statistically, but you don't even get, you're not going to get, most people statistically don't get remarried. You're on your own. You're paying your bills and you're doing your stuff. So very important. All right. Let's talk about the pre-retirees life insurance. What do you look at? So we're looking at a couple things when it comes to pre-retirees is, okay, do they still have debt? If they still have debt, then we definitely need to carry some sort of life insurance, especially if they're married and they depend on each other's income. Plus, those are the highest earning years and typically your highest saving years for retirement. So if a lot of times when someone has 5 years to retirement and they're going to max out their 401k and maybe their spouse is already retired, I'll talk to them about life insurance on that person that's going to continue to work, because if that person, he or she, doesn't do what they're saying in their plan and ends up passing away, it's going to change their plan for sure. And if you can't save that $100,000 that last 5 years, it's going to change the plan. And if you pass away, there are expenses that go with that too. So yeah, that's a great thing.
You don't want to have to go back to work.
No. And then Kole P, because we work a lot on this, I know Kole J does, but tell me about long-term care insurance life insurance doubling back as long-term care insurance, because we get this question a lot. And like you said, the older you get, the more expensive it gets, especially in that pre-retiree age. Your health changes quickly. All of a sudden you're 50, you're healthy. All of a sudden you're 55 and you have heart condition. You know what I mean? Things change a lot quicker, I feel like.
They do. They change between 50 and 60. I see a lot of people where their health changes. And so the sooner that you can get a policy that doubles back so if you have a life insurance policy that has a long-term care rider on it, they don't usually call it a long-term care rider. It's usually called chronic illness rider or something like that.
Fancy terminology.
Yeah. So we don't sell traditional long-term care insurance. That's not sold much anymore at all, because the companies that were selling that, there used to be like 400 companies that sell it. Now there's 3, because a lot of them went out of business because long-term care costs went up so high. So I'll get off my soapbox with that. But we don't sell traditional long-term care insurance where you put money in, and if you go to a nursing home, it gets activated.
Maybe.
If you don't, then nothing gets activated. We sell life insurance as a long-term care solution, because no matter what happens to you, you're either going to use the money for long-term care or you're going to die and not use it, and then it's going to go to your beneficiary. So one way or another, you're putting money into something and you're going to get the money back while you might be dead, but somebody's going to get the money back.
Thanks, Colby. Happy Valentine's Day. You're dead.
Right.
That's one of the, tying this back to like the financial plan and sitting down with an advisor, why we're talking about this, it can be one of the biggest detriments of your retirement plan and your long-term, of your strategy of what, and especially if one spouse goes in versus the other. That's when it's really a bad scenario, where one spouse has a normal, life, still can live at home, wants to travel, and one spouse, ends up in care. It can suck all the assets, from that other spouse, and they're just left with a house.
Definitely.
And no cat, nothing else. So that's one of the biggest things. And that's why, it's really tied into the financial plan and a big piece of what we do.
Yeah.
Yep.
That's
Absolutely.
awesome. All right. We're going to take a quick break and we will be back.
This podcast is produced by Spin Market and Digital.
Located in Fort Dodge, Iowa, Spin Market's highly skilled team can help you increase your market by updating your website, improving SEO, designing advertisements, and producing podcasts that will grab the attention of your market.
Contact Spin Market today for all your digital marketing needs at digitalagent@spinmarketwith2ks.com or call us at 515-302-8026. And to learn more, visit our website at www.spinmarketwith2ks.com.
That's digitalagent@spinmarket.com or 515-302-8026, or visit our website www.spinmarketwith2ks.com.
Welcome back. Kole P, very loyal Bronco fan, stopped over at the Super Bowl at his house, and his whole family had all the Bronco gear on. I was like, wow.
Yeah.
They go all out.
We're pretty excited about the Sean Payton hiring. I know last time when we were doing the podcast, I was like, why does nobody want to coach there? And they must have just been working out terms, I would assume.
How do you feel about it?
I love it. Yeah,
Yeah.
I think it's a great hire.
Yeah, I think it's a great hire, and I think he'll do well. I'm always a positive outlook type of guy, but hopefully they win more than 5 games like they did this year, and that's going to be better.
Well, my Panthers hired a coach as well.
Nobody cares.
Well,
I
do.
care, Caleb.
I'm happy with our hire as well.
Yeah.
Frank, right?
Now we just need a quarterback. Like,
Okay, I love football, don't get me wrong, but I am super glad March is coming, and there's some great basketball going on. And I just went on to give a shout out to the Iowa women's. I don't know if you've watched them. They lost to Indiana, but
Yeah,
they go
that was
play
a
them
great
again.
game.
Yeah, I'm going to the Indiana game.
Oh, at
Iowa.
A lot,
When
of
is
hype,
it?
a lot of hype in the Iowa women's basketball.
Okay.
Right now.
They're 20-5.
It's pretty cool.
Caitlin Clark is the best player, like national player of the year, easily. Like she is changing women's basketball. And I know what people are going to say, the tournament. No, she is easily the best women's basketball
Yes.
player. She's phenomenal. The way she can see the court. This is a woman's plug here. Sorry, guys. Sorry, gentlemen. But she's amazing. You should watch her.
Yeah,
we
if you
watch a
haven't
lot of
watched.
games. We watch
Yes.
almost all the Iowa games, women's
Yeah.
Iowa games in our
Yeah,
house.
they're so.
Yep.
The men were on at the same time playing number 1 Purdue,
Yes.
and the women were playing Indiana, and
Yeah.
I was watching the women's game.
Same here.
And it was the most watched women's basketball game in history. Indiana and women college basketball.
cool.
Like
That's
preseason.
awesome.
It is. And then the Indiana game's already sold out. And at Iowa, it's been sold out for weeks.
That's really cool.
And
Oh, that's cool.
the amount of following Caitlin Clark has in like young kids it's great. It's
Yep.
great
Yeah.
for women's basketball.
Yeah.
So.
Well, back to the Panthers and Frank. Right? No, I'm just kidding.
Sorry, Caleb.
You said you didn't have a quarterback. Well, Tom Brady's available. What do you think? You'd
no.
probably take him, wouldn't you?
I mean, yes, he'd be better than any other option.
Tom
but
Brady retired.
He should stay retired.
I see he's already getting promoted up to like the lead,
Is he?
Fox News analyst over
Yep.
Greg Olson.
Oh,
I mean,
nice.
and Greg Olson just did the Super Bowl.
Did you guys see this? The sand he retired on. So he sat on a beach and retired. Someone went right away, grabbed the sand, and sold it for like $100,000.
No joke.
I can't
Oh
make
my
this
gosh,
up. And I'm
this is
like,
ridiculous.
don't put that in your budget,
It's like
people.
the NFT thing. The NFT.
Yeah, yeah.
Don't get into that, but
All right.
The Tom Brady, he's gonna take 1 year off and then become the lead analyst at Fox. I'm like, are you not gonna like ever take a break in life from football?
Yeah, but once you this is a good tangent. People who save and save and save get to retirement and they have a hard time spending. People who spend and we're like, oh my gosh, you might want to save a little. They have it is however you do life.
Purpose.
Is like intentionally, like kind of how you do everything is, you know what I mean? So that's a very interesting.
he's a guy that needs purpose. I'm
yes,
guessing.
he needs drive,
Yep.
work. There's no
needs
way he
something
can
to
just
do.
go
Yep.
hang out and relax on the beach.
I could play a lot of golf. I'd probably get bored of that eventually.
You'd break
too.
a lot of clubs. It's a bit expensive.
I was having this conversation with my son and my wife the other day, and because they were talking about Tom Brady and about how he's going to be an analyst and how he wasn't going to stop, basically. And I said, people that are that successful
Yes.
are just wired differently.
Yes.
Don't stop.
You hear about the Mamba mentality is kind of
I was
the whole
just
thing about
thinking of
Kobe
Kobe.
Bryant. Like
Yep.
the whole mentality of being successful is just, it's different. Those people are just different.
So after Kobe retired, he would still wake up at like 3 or 4 a.m., go to his office, like meditate on his day, pre-work. Just crazy. That's my point.
Yes. They're
RIP
just wired differently.
to the great
You'll
master.
never understand them.
They
at
don't
all.
want to be understood.
Yep.
They
No.
don't want to be
They want you to just
understood.
leave them the heck alone.
Yes. All right. That was great. Dollars and cents. Let's go.
Dollar bills, y'all.
Two-part. We're going to do a stat and a
Yeah,
tip.
yeah.
Colby.
So the stock market has started out pretty well this year. The Nasdaq was the first full year of trading for the Nasdaq was 1972. So typically that's tech stocks, small company stocks, things like that. This year, the gain over the first 25 trading days was 15.7%, which is the third highest of all time. So it's off to a great start as far as the Nasdaq goes. It's come back a little bit recently, but we both had a positive, or we all three had a positive outlook for this year, as far as, things not necessarily returning to where they were at, but we think that we're getting closer, getting to that point at some.
It's nice to see some positive
Nice
statements.
to see green on the TV.
Yep.
Yeah.
on
Yep.
my Apple Watch.
Yep. So
All right, Cole J, I heard you have a tip for me today.
yeah, well, this kind of ties into our budgeting. Caleb potentially.
Caleb, take notes. Grab a pen.
Got pre-approved
I'm
for
ready.
a mortgage, right? So he's in this, but. Just a quick tip here. So if you have a 30-year, and I'm talking about a 30-year fixed rate mortgage, but this can really apply to any loan. So if you have a 30-year fixed rate mortgage and you do nothing different, say your mortgage payments was $1,000 a month for 30 years, if you just take that $1,000 and do $500 twice a month, so $500 on the first, $500 on the 15th. Now you do have to get ahead 1 month to get this.
Yep.
You'll shave roughly 3 years, just not quite 3 years off your mortgage by doing nothing different. And that's
Why?
really attributed to because you pay daily interest on your mortgage. So you're paying 15 days early on a portion of the interest every month. And over a 30-year lifespan of that mortgage, it's about 3 years. Now, I will say the caveat, not every bank will allow you to do that. So, but that can apply to almost any loan. If you just want to pay, your car loan, you want to take it instead of paying monthly, you pay weekly, you're going to save that daily interest, over that lifespan of that loan. So it's going to get you doing no more money coming out of your pocket.
You're paying the same amount, but you're just paying it ahead.
Yep, and you're paying a little less interest because you're paying less days.
That's a great tip, and I told Cole, I was like, I've never heard that before, and I've been doing my payments wrong my whole life, so I will be switching a lot of things around.
Just enhancing people's life through a podcast, right?
Yep.
One money tip at a time.
That might be the best tip we've ever had on dollars and cents.
Yeah.
I've gone through it, a lot of people, especially with like big debts, like someone has really big debt, and they're like, oh my gosh.
Yeah.
I'm like, it's no more money out of your pocket.
That's a great tip.
Yep.
So just want to make sure that we're clear. So you use the example of $1,000 30 year. That doesn't change based on how big your mortgage is, the 3 year versus like 3 years cut off at the end.
It's just that 2 payments. Even if you didn't want to split that, say you want to pay less the second time, you're still going to save money because you're paying more principal, or you're paying less daily interest over the lifespan.
The money's going
loan.
more to principal.
Yep. I'm just using that as an example, but it's the paying twice a month is what matters.
And just for a first time home buyer, PMI, do you know what that is, Caleb? And how to avoid it?
Mortgage insurance. If you do 20% down, you avoid it.
Okay.
Yeah. Here we go.
Yeah. I just feel like
I will admit we're not going to be avoiding it.
But if we can, very common.
Yeah.
But I just was thinking about
But a lot
that
of people
when
don't know once you get to that point where you've paid 20% off, you can redo your loan or take the mortgage insurance off because the mortgage company won't do it.
A lot of times, if you just even if you're close and you call the mortgage company and ask, hey, I think I'm at 20%, equity value of my house, they'll a lot of times take the PMI off.
Yeah.
Yep.
So if they just saved you a bunch of money, make sure you let them know.
Yeah.
Send them a thank you card.
Yeah. That's awesome. No, that's great. All right. I'm in my financial meeting. I'm getting exhausted because these guys are asking all the questions.
It's not that exhausting.
No, it's fun. I get excited. That's I would say this too. That's probably our favorite part of the job, sitting with people, getting to know them,
learn their story.
I will say we did this over 2 meetings, 2 meetings podcasts or 2 podcasts. A lot of times if we're really extensive with you, it's probably going to be a multi-meeting type of process, especially if we're building a real elaborate plan or you have a lot going on, or you need we might focus on budgeting the first half, and then it's your accumulation on the second half, or your insurance in the second portion. We don't handle everything at once. We don't want everyone to eyes glaze over and fall asleep on us.
We don't have 4-hour meetings. So
no. That's good to know. Okay. Disability insurance. Cole Peterson. What is it? Why do I need it? Why do you want to know about it?
Yeah, so disability insurance is important for everyone that has a job and has an income, because if you are hurt and you can't work, if anybody depends on your income, which typically you depend on your income, but you might have a spouse or kids that depend on your income.
Your retirement savings depends on your income.
Yep. So disability insurance is if you get hurt, whether you're on the job or not on the job. I'm not going to go down the workman's comp route at all. I'm just saying disability in general. It would pay out to you like a paycheck after typically 90 to 120 days, sometimes 6 months, sometimes 1 year. But you can set it up however you'd like to, but you would have an income if you can't work. So mostly very important for people that are self-employed, where you don't have an employer that provides you some sort of disability policy. So us as financial advisors, we're not employed by anybody. We employ ourselves. So we have to have disability insurance, because if we can't work, we don't have a disability policy. Another thing to also let people know is just because you have a disability policy through work doesn't mean you're covered. You are covered at typically 60%, and that is also paid to you, but it is taxed because your employer has paid for that for you. Mm-hmm. So you're taxed. So usually you're only going to collect about 50%. So Bailey, if I cut 50% of your income right now for you and Luke, would that change things for you guys?
Oh, that'd be a dagger.
Yeah, it would change things, right?
He's looking at
there
me.
Goes the budget.
Yeah. Well, Yeah, that's an emergency.
Yeah.
Fund. But then you can't catch up because you never know how long you're off work.
Right. And we've had people our age that, get sick and they can't work for 2 or 3 years recovering from cancer or what, things do happen. So, you don't want to overinsure. We don't ever want to overinsure you, but we've got to get you something that will at least get you past a point in your life where you are in
bridge
trouble.
through that time.
Yep.
Okay, what are some other things we look at, Cole J? I got all my insurance, all my income, you got all my statements. What other assets do you look at? I know I said other assets before, and we kind of went into insurance, so let's shift to the other assets.
So I'd say most common scenarios where we're kind of rounding out the plan here of talking about, okay, maybe it's a business owner, right? We're using that self-employed individual business owner, and he's well, big piece of my retirement, selling my business. That's another asset that we're going to look at. Or most commonly for us in this area is farmland, right? That's a big piece of people's retirement income. And those are another piece that we're going to round out, tie into your financial plan. And how's that look? Are we going to, have a liquidity event where, maybe 55, we're selling a business for $1 million and that's a big piece. And then we're going to design the income off of that. Or it's, hey, I've got, 250 acres of farmland that I'm going to get $50,000 a year in cash rent for. Good. That's a big piece. So those are all tied back into the overall plan and things that, and that might come into, other real estate assets. It's a lot of times tied to the real estate. Piece.
And people's homes also, I think, are important. And that's what it kind of goes back to the debt that you have on your home. But when you're in retirement, sometimes you decide to sell the house and go to a condo and you're going to have obviously a windfall of cash. And what are we going to do with that cash at that point? Some people want to, in retirement, purchase another house down in Florida or in Arizona or wherever. So we're going to talk about that. So not just always, what you have, but what do you want to have in the future too? Because that's something that people want to do.
Okay, Mr. Business Owners, I'm looking at you guys. Should I just rely on selling my business for retirement? Because we have this conversation a lot. What's your guys' thoughts there?
So I would say the most common mistake I see with business owners, especially in this area, is they put all their money back into the business and they don't set up for the, unforeseen, or I can't sell my business at the end, because you are always going to value your business more than anybody else probably in the world. Your business, because that's how you've made your living. You've maybe been doing it your whole life, maybe only for about 10 years, but either way, you are always going to value your business at a higher amount than anyone else in the world will. And for you to actually get the amount that you want for your business, you typically have to start 2 to 3 years before you want to actually sell it.
That's a good point.
Yeah, so you gotta prepare.
Preferably longer.
Yeah,
preferably
you start
even
thinking
longer.
who's going to prospect that business way ahead of the retirement time. Go ahead.
But the average time for a business to sell is 2 to 3 years. I don't know exactly what it is today, but it's 2 to 3 years for you to sell that business. But also, you got to be realistic on price. The business is only worth what somebody is willing to pay for it.
Yep.
Yeah.
Doesn't matter anything else.
I always will ask, when having these conversations with a business owner of saying, first and foremost, kind of look at, okay, if you didn't show up for today, can your business function for the next year?
Yeah.
And if it can, you probably got something that's worth a little bit more because you have built the structure in place. If it's like, no, that baby's got to run, I got to be there every day.
I am the business.
It's not going to be probably as valuable when you step away unless you really have a lead person that you're teeing that up to. But most of the time, if you do have someone you're selling to, they're probably doing a lot of the work already. So you're already like half dialed out. Your business is going to be valued more at that point. And that's where it's easier maybe to, understand that. Or if someone has a plan of like, yep, this individual, is I have earmarked, we've already talked about buying the business, but then you have to plan, how's that person going to be able to actually buy you out and the mechanics of buying
Correct.
you out.
And I think people just assume it's going to be it's not like a quick purchase. There's a process to it. And I understand the pride of your business and why you feel like it's worth it because you put your blood, sweat, and tears in it. But just to be, again, proactively planning if it's worth that. And it could be a large part of your retirement plan, but just to put all your eggs there and like, that is my retirement plan. That puts a lot of stress on a business owner and the whole process of it.
You always want to have options. That's what I always say, like, being in control of like, I can choose to stay involved in the business or I can choose to dial out. And I've saved a bunch of assets. So if this falls through, I still have some assets over here. I don't have to solely rely on my business selling for me to retire successfully.
Yeah, that whole thing with succession planning, again, that takes years. That doesn't take months.
Yeah.
So people don't try to, I'm going to retire at 65 and come to, a financial advisor at 64 and a half and say, I need a succession plan for the next 6 months. It doesn't work that way. So, selling your business and putting all your money into your business is not, it's not ideal, but if you're going to do that, you've got a plan for, how you're going to go get out of it. Basically, that's probably the number one thing also that I see. I already said number one thing. So number two thing that I see is people just don't have a plan on how to get out.
Yes.
Or don't know how to get out.
Or don't know who to help them get out.
Yep.
Right.
And that's, again, that analogy. Like, I'm not going to the gym and getting abs by doing my workouts. I have no idea. You know what I mean?
Yep.
It's the same thing walk through. And I feel like we could do a whole podcast just for business owners on planning, and that's a separate whole thing in itself. But just, again, young people, old people, business owners, just the importance of being organized, looking at my debt, looking at my retirement plan, looking at my budget. Like, these are things we look at every day, and just having someone to guide you through it. So here's my last question. I love to just put the guys on the spot. If I want to meet with you guys, I'm nervous, what would you say just to make me feel comforted to meet you guys?
Start drinking in the morning. No, just
They love when I ask them questions and they're not ready for it. Do you want?
Be ready to have the conversation.
You go.
Just ask the question. Just the first step is always action. Just make hey, I have this specific, and we don't go in detail with every single person. We much prefer to know more. The more, the better for us, because the better advice we can get. But if you have a specific problem, you're like, hey, I'm really concerned about this. We're going to focus on that at first and probably mold in the other things. But know that, first step is just asking the question.
Yeah. We're usually the first meeting or the first or the second meeting, we're going to give you what you want, what concerns you the most. And then maybe the third or fourth meeting or a couple years down the road, we're going to give you what you need. What we do it on needs analysis. We're going to say, okay, we took care of your 401k, your investments, everything, but you need life insurance, so we're not going to probably start there because we want to do with what you're concerned with. But I would say that, coming prepared is probably what I would tell someone that is nervous about meeting with a financial advisor. Just come prepared, bring your statements, bring as much information as
Ask
you can
questions.
with you, because we can, we'll ask questions based on the statements, but the more information we have, the better, and the less questions maybe we'll have to ask you. So
Yeah. I think another thing to keep in mind is this is relationship based. Like, we want you guys to want to work with us. And Kole Cole, I'm just going to say this, you're just normal, nice family guys in the community. You're not, you guys are a little dorky at times when you talk about golf.
Aren't we all dorky at
Okay.
times?
Yeah,
Okay.
I'm
Over
the
there,
biggest dork.
Miss Budget.
I am
over
a
there.
dork. But you know what I mean? I just want people to understand, like, you guys aren't intimidating. The process isn't intimidating.
We're having real conversations.
Yes, and we're just
That's what it
real
is.
people, like general people who care and want you to have a great plan. And the geeky thing is we love planning. So, like, we look at these kind of things every day, whereas you don't really need to be intimidated because you're not looking at this every day. You're not thinking about it every day. Like, my husband says all the time, like, people ask him, like, what should I do? He's like, I don't know. My wife does that. Like, you know what I mean? So I think that's a good tangent to know for a first time meeting.
yeah,
But
for sure.
I'm going to do before I do my quote, we want you to, don't forget to share this with a friend who might need a financial planner or want to know what planning is. Like it on YouTube. Caleb, am I missing some social media?
If you made it this far in the podcast, please give them a 5-star review because they did a great job today.
Yeah.
And it helps more people find this podcast. Subscribe on YouTube. Follow us on podcasting platforms. Follow them, not us. I'm just the producer.
You're part of it.
You're part of it.
And make sure you follow these guys on their social media account. Cole CFG, Cole CFG, Bailey CFG.
Yes.
LinkedIn,
You can find
Facebook.
us.
You'll be able to find it. Just look
We
up
appreciate
CFG.
the support though, because we want to be able to keep giving you great content.
Yeah.
And
sure.
Cole Peterson doesn't understand the algorithm, so help him out.
Yeah,
He doesn't understand.
Yeah,
Please do.
before the podcast today, we were explaining how all the organic traffic works to Cole Peterson.
I don't know what organic what.
Organic traffic.
We got to wrap this up. We're getting
Okay.
on there.
Don't sell yourself short. You are more capable than you think. Never stop dreaming and striving. Steph Curry.
Go Cubs.
You've been listening to How to Money with Kole Cole, the podcast of the Central Financial Group, courtesy of Spin Market. To learn more, visit their website at www.centralfinancialgroup.com and follow them on all their social media platforms.
For now, I'm Cole,
And I'm Cole.
and we'll see you on the greens.
4.
Securities and investment advisory services offered through Royal Alliance Associations Incorporated, member FINRA, SIPC. Royal Alliance Associations Incorporated is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Royal Alliance Associations Incorporated. Material discussed is meant for general informational purposes only, and it is not to be construed as tax, legal, or investment advice. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Past performance is no guarantee of future results. Diversification does not insure against loss. Any guarantees discussed refer only to fixed insurance products and are backed by the financial strength and claims paying ability of the issuing insurance company.